Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for December the 24th. Of course, there will not be an update tomorrow, just so you guys know. But before I jump into today's content, please do me a huge favor. Go ahead and hit the thumbs up button on this video. Also, don't forget to subscribe to the channel, and don't forget to tick that bell icon for notifications. Before I jump into the Bitcoin talk, guys, I want to give you a heads up. I saw on Twitter that a lot of YouTube channels that are related to crypto have been getting shut down, or at least temporarily banned for like a week. I don't know if it's something with YouTube's new algorithm or if there's an old algorithm that's suddenly coming back in play. I don't know what the deal is, but a lot of channels have gotten this little temporary ban, and some of them maybe they did something wrong, but some of the channels were actually legit channels. Or at least one of them. I'm not sure about the rest, but there's at least one of them where I think the guy's pretty legit. I haven't watched any of his videos in a couple of years, but I was watching his videos when I got started in early 2017, and he seemed like a reasonable person who was doing the right thing. So I have a feeling it's probably just something quirky with the algorithm. I'm bringing it up because if you suddenly don't hear from me for a week, it's because I probably also got banned for a week, and that would be why. But assuming that they don't come after me, we'll keep doing videos. Okay. So I want to talk about a couple things because while I still lean bearish on the macro picture, there's a couple of things that have caught my eye. And so I'm going to give you guys the full story like I always do. I'll give you both sides of the picture and kind of let you make up your mind for yourself. So the first thing I want to talk about was this ridiculous post that somebody put on Twitter. Twitter is like a gold mine for ideas for videos. I'm not going to call the person out or anything. I'm not trying to be negative, but the post itself just doesn't make any sense. So they're looking at this monthly chart, and basically, it's one of these people, they're always bullish, and they're telling people that the bear market is over and that we're starting a bull market because we have a MACD cross. Now, what they've done is they've taken this and they've turned on the simple moving averages. Fine, whatever. And so you have this cross right here. Okay, there's two problems with this cross, guys. Number one, December hasn't closed yet, so if we had some sort of massive dump in the next week, this blue line would actually pull right back down underneath that orange line, and that cross wouldn't even be there. You wouldn't even see it on the chart anymore. You never want to trade a cross that's not confirmed. That's very, very bad. So that's number one. But number two, I'm not sure where they're getting the idea that this is a big deal. It's only happened once in history, and it was right here. And it was in January 2016, and we were already moving up when it happened, okay? It wasn't like this happened and then price moved up. We were already moving up. We had bottomed. We had put in a double bottom on a monthly chart. We had bullish structure, and we were moving up. So to compare that to this when we're in the middle of a downtrend is absolutely not realistic, okay? So if you see people, you're going to see it. I guarantee it. It's going to get retweeted because bullish tweets get all kinds of exposure because people just love that hopium. But realize that, again, this has only happened once in Bitcoin's history, and it was totally different circumstances. That's number one. Number two, guys, if you look at the regular MACD, we are actually about to have a bearish cross. Now, same deal applies. The month isn't closed. So if we get a pump in the next week, these lines could actually split back apart, and you wouldn't see this little cross that's trying to happen. But assuming, and I'm not saying you should trade this, I'm saying if it does, right, close bearish, then we're going to have a confirmed bear cross on the monthly MACD. Now, is that a big deal? Listen, it's the same deal. There's just not that much history. I don't think you want to put too much stock in this. But if I had to pick one or the other, I would pick this one. And it's not because I'm a bear. It's because this one's happened more than once. This one happened the first time, right? You had the bear cross right here in August of 2014, right after the false bottom. It came back up, and then it was in its downtrend. Literally the same circumstances that we're sitting in right now, okay? So that is way more realistic to look at that than this other weird simple thing. Okay, so that's number one. It happened the first time in August of 2014 under the same circumstances we're in now. And then it happened again in June of 2018. And both times it happened, guys, look at this. Both times there was a monthly bearish cross on MACD, price had much further to drop. So from here, it fell from $480 all the way down to about $160. So it fell about 67% off this cross. The second cross that happened was in June of 2018, and that candle closed. It was between these two candles, so we'll give it the benefit of the doubt. We'll use the lower number, okay? So it fell another 50% from the lower number, and of course it fell, more than 60% from the higher number. Now we have another bearish cross trying to happen on the MACD. What's going to happen if we fall 50%? $3,500. Okay, we could have a double bottom. Bam, bam, bam. Imagine that double bottom on the monthly. That'd be wild, wouldn't it? And then it could move up from there. If it falls more than 50%, well, guess what? Say it falls 67% like that first time, that's going to put price at $2,300, right? So that's kind of a big deal. I mean, it really is. Like, I'm not making light of it. It's a huge deal. You really want to keep an eye on that, okay? MACD, I'm not a huge fan of MACD, but if you're going to go by MACD and you're going to go by history, that's been a bearish sign, okay? But again, if the month closes out bullish, if we get a big pump over the next week, which is totally possible, $500,000 pump, this will split back apart and it may not even cross. The monthly itself, since I have it pulled up, we might as well talk about it. This looks like it's trying to put in tweezer bottoms. Just so you guys know, tweezer bottoms are actually a bullish reversal signal. If you find tweezer bottoms at the bottom of a trend, it's often reversal. So I would keep an eye on that because that is bullish, not bearish. Okay, so that's the monthly stuff. I also want to talk about the weekly. This weekly is starting to look bullish to me. Now, I'm a bear and I'm giving you all this bullish stuff, but I just, it is what it is, guys. We got to play the market and what it gives us. We can't be completely one-sided. That's what drives me nuts about people on Twitter is these perma bulls. They don't know how to be bearish, and it's just better to play both sides of it. So if we're looking at a line chart, this thing has come down, and it's very clear what it's doing, right? It's come up. It's trying to put in, could be a double top, right? But again, we normally look for double tops at the top of a move, not the bottom. So it could potentially be a double top. If price moves down and closes under $7,111, that would be a confirmed double top. However, double tops often, when they don't confirm, when they don't break down, they often become ascending triangles, right? And that's what we could potentially be looking at here. This could actually be an ascending triangle on a weekly chart. That's a pretty big deal, right? If that thing breaks up, we measure this, it's got about a $611 breakout target, so it doesn't mean that the bear market would be over necessarily, but look at this. If we set it up there, that would give us a breakout up around $8,200 ballpark. What is that $8,200 that I talked about yesterday? That is the 200-day moving average on the CME chart. It's right in that ballpark. Look at this. Turn on my 200 daily. Boom. Sitting at $8,333. So if that does indeed break up, that would be the target that I would personally be looking for. Okay? Really, really interesting stuff there. I haven't looked to see if this is going to show up on the... So there's not really an ascending triangle on the CME, but that's because they're missing 2 days. So on the CME, this just looks like total, bear stuff. But I don't know. One problem I have with crypto, and it's actually made things a lot more difficult, I think. You don't know which chart to trade, right? Some people are looking at this chart and trading this chart, and some people are looking at the other charts, trading the other charts, and they're totally different charts, painting totally different pictures, right? When I see this looks bearish. When I see the other chart, it looks bullish. a little bit crazy when you think about it. The 200-day moving averages, again, totally different. This 200-day moving average is sitting here at $8,300, a little over $8,300. The 200-day moving average on the regular Bitcoin chart is sitting at like 93.14, $1,000 higher, over 10% higher. So it's really, really tough to figure out, what's going on. Now, what I will say, when we're looking at that weekly chart, this RSI is kind of pinging around the bottom of this support here. So if this comes back down and hits this line, this ascending line here, at the same time it's hitting support, I might, and it depends on what day it happens and all that kind of stuff. I'm going to take a little bit of time off for the holiday, but if it hits there and I'm at the desk, I might actually take a long position on this. Okay. I wouldn't be looking to, quote unquote, ride it to the next all-time high. I would just be looking to play a swing trade, and see if I could get it to break out of that triangle. And then if it did break down, I could just get stopped out. It wouldn't be that big of a deal. So, going to watch that. I'm pretty interested in that. If we look at the daily chart, we'll get back to the 3-day chart in just a second. But if we look at the daily chart, there is no ascending triangle on the daily. Okay. So it's a very different picture, right? You've got a lower low on the daily, and you also have lower lows all through here on the daily, or you did. This almost looks like a bullish breakout, right? Almost looks like this was a channel, that it broke out, that this was a retest, and then it's wanting to bounce up off of there. So, again, I see bullish structure trying to form in this daily chart, okay? It is what it is, guys. Bear, bull doesn't matter. You got to trade the chart, and that looks bullish to me. Okay, so I'm not going to rush into any short positions. I'm not going to be at my desk today anyway, not today or tomorrow. So I don't really care what it does as long as it doesn't get too squirrely on me. But that daily chart, I see some bullish structure there. I don't see an ascending triangle though. Okay, so it's a different picture. So that's interesting to me. Don't forget that we still have this hidden bearish divergence at play until we close above this 77.60 level. We need to get a close up above this level to really get me looking for, a big move. Okay. And ironically, where's that triangle top? Triangle top sitting right around 75.50. So a close up there would actually break us out of that ascending triangle on the weekly. Okay. So I think it's the level I want to watch, 77.60 on the daily. If we look at the 3-day, right? 3-day, again, it looks bullish, okay? I mean, seriously, it's just good news for the bulls today. We bounced off the bottom of support a few days ago, or about a week or so ago. We closed right at resistance yesterday. That was, the 3-day candle closed yesterday. This candle, it's only about 12 hours old, so a lot can happen. It can crash and tuck back down inside there very, very easily. Right, just like it was way under it back here, and then it tucked up inside of it on the weekly. If this thing can close this 3-day candle, which again has 2.5 days left, above this line, I think it's a very good chance that this will run up and test the top of this box. I don't think it's going to go up a little bit and then turn around. I think it'll run to the top of the box, right? And what that does with price, I don't know, right? Again, maybe it goes up to like 82, 8,300. Would be that ascending triangle target, would also hit that 200-day moving average on the CME. Maybe it goes higher. Maybe it tests the top of this move, this downward sloping trend line here. Can't talk this morning. Maybe it tests that up around 8,800 to $9,000. And of course, if it does, that would be that, broken record. Here it comes. That would be that 61.8 fib, and it would be the bottom, this bottom support here that turned into resistance, right? That's the magical number that I've been looking for, trying to be patient and wait for it, but it's been difficult. I've wanted to rush into shorts on several occasions. The ironic thing is I actually went long this morning, not because I was wanting to trade. I actually wanted to transfer some money from Bittrex over to Coinbase so I could cash it out and send it to my bank account. So I bought Bitcoin at like 72.70, and then it actually ran up. There was a setup there, so I don't want to make it sound like it was luck, but it took like 30 friggin' minutes to transfer it, so I was a little bit nervous. But yeah, it worked out. I made some money on a transfer, which was weird. So that's what I'm saying on the monthly. That's what I'm saying on the weekly, daily, all that stuff. Like I said, for the most part, I'm seeing a lot of bullish signs on the lower time frames. I just don't see them on the monthly yet, right? The monthly looks bearish to me. But keep in mind, I can't stress enough, guys. You don't want to trade stuff that's not confirmed. You don't want to trade, crosses that haven't closed yet, because even though that monthly does look bearish, right? If all these bullish things that I just went over, if all those things come into be, it'll look more like this right here. It'll just come right back apart. So that's one reason you just don't do that. You never trade something that's not closed like that, because it can really pull a gotcha. Okay, so that's the monthly, weekly, 3-day, and daily. And as far as the smaller time frames, I have no idea what this line is from. Bear with me here while I figure that out. Oh, okay. That's my 4-hour trend line. Whew. Sleep at the wheel this morning. So this thing, on the smaller time frame, on the 4-hour time frame, you can see I've got some Fibonacci levels drawn, and I was looking for it to get up to 75.09. If it had, I was going to look for a short setup, but now I'm getting ready to leave my desk for the day, so I won't. What I will say is it broke above the 200, right? Talked about this in yesterday's video. This looked like it might be a bullish retest. It slipped under a little bit, but it's right back above it, so that very well could be a bullish retest. All right, so that's kind of what I'm seeing there, right? It's quite a change of pace for me because I am so bearish all the time, but just looks good for a bull, right? I don't see any long setups. I want to be very clear. I'm not saying that I'm going to jump into a long position just because. Like I said, there's going to have to be some very specific things that happen that are going to get me to fight the trend. That being said, and I'm not, by the way, I just want to be very clear, I'm not backtracking. I still think the most likely scenario is this thing's going to go down, that it's going to go down hard, it's going to go down deep, and probably go back down to retest that 2013 high. I haven't changed. I still think that's probably what's going to happen. But if these things come to pass, I'll have no problem, taking a little bit of a gamble. And, if there's a setup there, I'll go ahead and fight the trend, and we'll see what happens. Okay. One thing I do want to point out about this monthly chart, guys, while I'm very bullish on some of these other time frames right now, this monthly chart is not up for debate. This is a very bearish chart in the monthly. You had a high, you had a low, that was all fine and dandy, right? Then you had a lower high, still not terrible because you don't have a lower low yet, but bam. This is a closed candle. November's candle is obviously closed. That is a confirmed lower low. So if you've got a lower high and a lower low, that is a confirmed downtrend on a monthly chart. That's not easy to suddenly turn around and break out of, right? Once you have that confirmed downtrend, that's going to take some, muscle to force your way back up. If we look over here, right, this was all an uptrend. We didn't actually have a downtrend. Even when it was down to 10 grand, it wasn't actually a downtrend yet. It wasn't a confirmed downtrend until it put in a lower high and a lower low. And that right there at $6,800 is when we had a confirmed downtrend. I know that seems extreme, but on a monthly, that was it. And then it had another lower high here. And if you'd have switched your bias, right, then you could have said, okay, this is a lower high, and you could have shorted it there at $9,200. And then, of course, you could have made a lot of money writing it from $9,200 all the way down to the bottom if you wanted to. Or you could have wrote it down to the next lower low, closed that position, waited for it to pump, shorted that lower high, wrote it down to the next lower low, bam, right? Waited for it to pump, shorted that high, right? So on and so forth. So, it's not rocket science, guys. I mean, I don't say that in a condescending sort of way. I say it because I think a lot of traders, especially newer traders who have maybe a little bit of success under their belt, I think they like to pat themselves on the back too much and pretend that this stuff is way more complicated than it is. It's really not complicated. Trading it's really like 20% charting and like 80% emotional control, right? I promise you, a 10-year-old can learn how to chart in a week. It's really that simple. It's not exactly the most difficult thing in the world. What's difficult is actually taking the trades and closing the trades when you're supposed to. What's difficult is when you make a decision and the market moves against you. It's difficult sometimes to make yourself close that trade, right? And it's difficult sometimes when you get into a position and things look sketchy to hold that position and not chicken out and not sell too early. You want to ride those positions when you're right. You want to ride them for as much profit as you can. So guys, honestly, I just rambled like 10 or 15 minutes about alts, and it's pointless, right? Everything I was saying is just like me rambling. So please remember that I am literally some guy sitting in a spare bedroom, so nothing in this video is financial advice, nothing in the video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. Also, please have a Merry Christmas, have happy holidays, whatever your beliefs are. Take time off, enjoy yourself, enjoy your family, and this market will be here when you come back. All right. If you haven't already, be sure and give the video a thumbs up, subscribe to the channel. Don't forget to click the bell icon, and don't forget to check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and where you can take my trading course if you'd like to learn how to trade. This is James with Crypto Common Sense. Trade safe.